Picture the Bitcoin symbol. What comes to mind? Most likely, you envision a graph with dramatic peaks and valleys, representing Bitcoin's famous volatility. Now, picture a stablecoin symbol, perhaps a simple dollar sign. This image likely evokes feelings of stability and predictability, but how are these two seemingly opposite worlds connected in the crypto universe? Let's dive in. Bitcoin, the original cryptocurrency, is known for its price swings. This volatility can be exciting for traders seeking profits, but nerve-wracking for those seeking stability. Enter stablecoins, a type of cryptocurrency designed to maintain a stable value, usually pegged to a fiat currency like the US dollar. They offer a safe haven during Bitcoin's wild rides. Imagine Bitcoin as a speedboat racing across a choppy sea, its value rising and falling with the waves. Conversely, picture stablecoins as a sturdy anchor, holding their ground amidst the turbulent waters. This difference in price behavior stems from their fundamental design. Bitcoin's value is determined by supply and demand. When demand surges, its price skyrockets, creating a bull market. When fear grips the market, demand plummets, leading to a bear market. Stablecoins, however, are designed to resist these fluctuations. They achieve this by maintaining reserves, often in the form of fiat currencies or other cryptocurrencies, to back their value. This stability makes stablecoins attractive for everyday transactions and as a hedge against Bitcoin's volatility. When Bitcoin's price plummets, investors often flock to stablecoins, seeking refuge from the storm. This flight to safety can temporarily increase stablecoin demand, subtly influencing their prices. While Bitcoin and stablecoins appear to be on opposite ends of the volatility spectrum, their fates are often intertwined. One theory suggests an inverse relationship. When Bitcoin's price falls, stablecoin prices rise, and vice versa. This makes logical sense as investors seek stability during Bitcoin downturns. However, market dynamics are rarely simple. During extreme market events, both Bitcoin and stablecoins can move in the same direction. For example, in a market-wide crash triggered by global economic uncertainty, both Bitcoin and stablecoins might experience a price dip. This occurs because investors, driven by fear, sell off all assets, including stablecoins, to hold on to cash. Conversely, during a strong bull market fueled by positive sentiment and increased adoption, both Bitcoin and stablecoins might experience price appreciation. This happens because the overall influx of capital into the crypto market lifts all boats, even those anchored to stability. Now let's introduce another player into the mix, WorldCoin. WorldCoin is a new cryptocurrency aiming to create a globally accessible digital identity and financial network. While still in its early stages, WorldCoin's price is likely to be influenced by Bitcoin's performance, at least initially. As Bitcoin is the largest and most established cryptocurrency, it often sets the tone for the broader market. If Bitcoin thrives, it can create a positive ripple effect, boosting investor confidence and attracting capital to newer projects like WorldCoin. Conversely, a Bitcoin downturn can cast a shadow over the entire market, impacting WorldCoin's price. However, several factors unique to WorldCoin will ultimately determine its long-term price trajectory. These include the project's adoption rate, the success of its digital identity initiative, and the development of its ecosystem. Positive developments in these areas could propel WorldCoin's price upward, potentially decoupling it from Bitcoin's influence. In conclusion, Bitcoin, stablecoins, and WorldCoin represent a fascinating interplay of volatility, stability, and ambition within the crypto space. While their prices can be intertwined, especially in the short term, each is driven by unique factors that will shape their future. Understanding these nuances is crucial for navigating the exciting, unpredictable world of cryptocurrency.